Hello and welcome, amazing ACCA performance management students. In this video, I'm going to help you pass your upcoming PM exam. I'm going to take you through Practice Exam 2, Section A, all of the objective test questions. So, team, let's get started. Friends, I have the Practice Exam 2 open on my screen. I found this in the practice platform. So before you continue watching the video, I highly recommend hit pause, go into the practice platform, find PM resources, find Practice Exam 2, try these questions on your own, come back, continue watching the video, and we'll solve them together. Welcome back. Before we dive into the questions in Section A, let's talk about time management. Let's talk about the exam approach. A great way to tackle your exam is to start in Section A, the 15 short objective test questions covering all of the syllabus areas. You'll find some easy questions here. You'll find some questions you know how to do, so scoop up easy marks first. In Section A, I'd like you to spend 45 minutes on your first pass through the questions. Be ruthless with your time management. Accept the fact that you won't finish all of them, okay? But you want to get most of them done. And don't take these questions sequentially. Every one of you watching this video will get questions in a different order, right? There's a database of questions. They'll get served to you randomly. You want to go through here and you want to scoop up the easy marks first. So to simulate that, I hit next. My first question, I look at the requirements. Oh, look, margin of safety, CS ratio, target profit. Guys, this one is a lot of work. Flag that, okay? Then move on. Oh, look at this. This one is a simpler theoretical question. 4 simple sentences to evaluate. You can do this one quickly. Even if you don't know the solution, the right answer, you can just take a guess and keep moving. So the approach. Spend 45 minutes on your first go through Section A. When the 45 minutes are up, stop what you're doing, leave it unfinished, even if it feels unnatural. Move to Section C of the exam. Spend 34 minutes on each of those questions. When you're done with that, move on to Section B, the most difficult part of the exam, in my opinion. In Section B, you'll give yourself 17 minutes per scenario. And if you follow that approach, you're going to have 10 minutes of buffer time at the end. Then you can come back into Section A and finish up anything that you didn't do and guess at all of the remaining questions if you have that option. Let's begin our debrief of Section A. I'm going to take the questions sequentially. Remember, in the real exam, you'll go through them first, doing the easy ones first, but here we'll just go through them in order. Question 1, a more difficult question. I'll show you how to do this in the scratch pad, assuming you're working with home invigilation exams. On scratch paper, it's easier, so I'll show you this more difficult approach. What I'm going to do is get organized first, and I'm going to read the requirement, and I see that this is all about CVP. I see margin of safety, I see CS ratio, I see a target profit calculation, and then some change in units. What's the impact on profit? So I need formulas. I will now just write down everything that I see. Option 1 is margin of safety. Remember, I can use any abbreviation I want. The scratch pad will not be checked by anyone. It's just for my own note-taking. Option 2, CS ratio. Option 3, target profit. Option 4, change in units. Now that I know what I'm looking for, let me just write down the formulas. So a margin of safety in percentage terms will be the budgeted sales minus the break-even point divided by that budget, right? The drop in sales before we hit break-even. And I'll put some brackets there. Okay, that's the margin of safety calculation. A contribution to sales ratio is simply going to be the contribution over the sales price. That target profit calculation, well, that's going to be similar to a break-even point. We're going to get the fixed cost, FC for fixed cost, plus target profit, put that in brackets, divided by the CS, the contribution per unit. And then that change in units, let's see, if budgeted sales increase to 40,000 units, the budgeted profit will increase. Well, that's simply going to be the change in contribution linked to the change in units. Now that I know what I need to do to test each of those options, I know that I'm going to need fixed costs. So FC for fixed costs, that's going to be equal to something. I also need my contribution per unit. So let me get those two calculations out of the way. And now I look at the data and I see we have a cost card for one product. And they're expressing that fixed cost here at the unit level. That means we're using absorption costing. So a management accountant somewhere made an overhead absorption rate, which is that 4. Remember, fixed overheads are fixed. They are not related to activity level, but under absorption costing, we want to represent the fixed cost per unit for planning purposes. Okay, so we can work backwards. And if we multiply 4 by 30,000 units, we get 120K as our fixed costs. Contribution per unit, as you remember, that is the selling price minus the variable costs. And we want to get rid of that fixed overhead. That's under absorption costing. Remember, we have that fixed overhead per unit. So a quick way to do that would simply be to add the fixed costs to the profit per unit, right? So that would be 6 plus 4 equals 10. Guys, I'm writing this out for the demo. In the real exam, something like that, just do it mental math. Okay, I just want to show you here for this demo what's happening. Now that we've got those two figures, we can get rocking. And margin of safety, let's see if it is 40%. So that's going to be the budget minus the break-even point. Well, let's just quickly do break-even point above. Again, one more item here. Break-even point, that's going to be the fixed cost divided by the contribution per unit, and that will be the 120 divided by 10, so that will be equal to 12K units is the break-even point in units. So let's now crank out these figures and see which one is correct. So the budgeted output is 30,000. And the break-even point is 12. So the difference there, 18. We can drop 18,000 units before we hit break-even point. And the budget is 30, so we can do this at home. When you're doing this at home or in the exam, of course, use your handheld calculator. I'll use this on-screen calculator just because, to demo. So we know that that's 18, don't we? 18 divided by 30, and that's 60%, not 40%. Okay, so the margin of safety is 60%. Option 1, incorrect. Now, contribution to sales ratio. Let's just use the calculator here. That's quite straightforward. So the contribution per unit we said was 10. The selling price is 25. And we get 40%, not 24%. So option 2 is incorrect. This third one here, the volume of sales needed to make a certain profit, it's very similar to a break-even point calculation. Well, we're going to work in terms of contribution per unit. First thing we need to do is sell enough units to cover our fixed costs, which is 120,000. After we cover our fixed costs, we want enough contribution to put 270,000 in our pockets. And we know every time we sell a unit, we've got to cover the variable costs. So the variable costs are gone. What's left is contribution per unit. So we divide by contribution per unit, 10, and we get 39,000. So team, the third one is wrong. At this point, I would just guess at the fourth one and move on. But let's prove it and make sure that we're good. If budgeted sales increase to 40,000 units, that's a change of 10,000 units, isn't it? 30 to 40 is 10,000 units, so that's 10,000 units. And the contribution per unit is 10, so our contribution will increase by 100,000. Fixed costs won't change, so profit will increase by 100,000. Guys, answer is 4. Wasn't that a tricky question? That's why we go through all of the questions first and do the easy ones first. I would come back to this one at the end and then just take a guess if I ran out of time. Moving on to question 2. Which 2 of the following statements regarding zero-based budgeting are correct? When you're doing a question like this, remember that the distractors will not just be random statements. They need to be plausible somehow. So if we kind of reverse engineer this from the perspective of the question writer, the incorrect answers are coming from other types of budgeting. So instead of looking for the correct answer, I find it's often easier to eliminate the distractors, the incorrect answers. So I check out the answers, and number 3 jumps out at me as incorrect. It carries forward inefficiencies from previous budget periods. That one goes with incremental budgeting, the traditional approach to budgeting. So 3 goes out. I also see that 4 goes out. It's consistent with a top-down budgeting approach. Zero-based budgeting is about delegating part of the process to cost center managers who come up with their own decision packages, which they then present to a budget committee. So from elimination, I know that it's answers 1 and 2. And we can check that because, look at answer 1. It's best applied to support expenses rather than direct costs. Well, direct costs are linked to production. We've got to incur those. Support expenses, they might be discretionary. Well, should we spend on R&D or should we spend on training? That's where zero-based budgeting comes in. And it can link strategic goals to specific functional areas, because then when we decide on our decision packages, we can choose the ones that are best aligned with our high-level goals. So there you go. Options 1 and 2 are the best from this list of 4. Moving on to question 3. A tricky looking question on first glance. In the real exam, I'd probably flag this and keep going, but we'll do it together. First thing to do, always read the task, the question stem first, see what we're looking for. And we see which of the following actions would improve the company's existing throughput accounting ratio. So we are looking at specialist management accounting techniques. We're looking at throughput accounting. This is one of the tricky formulas that you need to memorize. They don't give this to you in the exam. So I will jot down on scratch paper or on the scratch pad the formula of the throughput accounting ratio. And we know that it's throughput contribution per hour over other factory costs per hour. Now that we know the formula, the only way to improve that would be to increase the numerator or decrease the denominator. And now I can check out the answers. Maybe we can just eliminate something from logic. And we see increasing selling price, reducing material cost, reducing material cost. So all of those options are linked to increasing the numerator. So they're all feasible or plausible. Can't eliminate anything immediately. Now, at this point, I glance at the numbers, and we need to focus on throughput contribution per hour. And we also see that the products are mutually exclusive. We can only make one of them. At this point, guys, I want to go to a spreadsheet just to review something with you. I have the numbers reproduced in this spreadsheet, and we are trying to make a production plan decision. And the criteria we'll use to make that decision is throughput contribution per hour. So I'm going to make a new row here. Throughput contribution. I'll make another row. Throughput contribution per hour. And throughput contribution is equal to the price minus the material costs. I can copy that formula across. Throughput contribution per hour is then that throughput contribution divided by the hours per unit. And we see that product X has the highest throughput contribution per hour. So the management accountant did this work, and we've decided that X would be the best product to make. Now, if we change the price or the materials of X and Y, we would only switch to those products if it exceeded the 2. So that's what we got to do in this question. Let's test each of those options, and 1, is it greater than 2? And if more of them are greater than 2, we want to go with the highest option. Let's do this in the scratch pad. So I open this up. I've got 4 options. For our demo, I'll just number them here. In the real exam, you wouldn't need to do that. Remember, no one will look at that. So option 1, we're going to increase the selling price of Z. So I'm just going to put this down, 20 minus 16, and I'll increase that price in a moment. Increase the selling price of Y. That's going to be the 40 minus the 10. And then for Z, again, we're going to reduce that material cost. So that's 20 minus 16. And for the last one, reduce the material cost of Y. Again, I'm going to put 40 minus 10 just to get started. Now, I'll use my handy-dandy calculator, and I will do those operations. So if we increase the selling price of Z by 10, that's going to go to 22. If we increase the selling price of Y by 10, that's going to go to 44, 10% that is. If we reduce the material cost of Z by 5%, let me do that with my calculator. That's going to be 16 multiplied by 0.95. That's going to be 15.2. And reduce the material cost of Y by 5%. So that's going to go to 9.5. So that would be the adjustment to the throughput contribution. But remember, we've got to divide all of that by number of hours. Now, of course, we do the subtraction before we do the division. I'm not going to type in the brackets. You guys know what we're doing here. So Z has 2.5. Y has 20. 2.5 again. Divide by 20. Okay, now that we've got this set up, I will do the subtraction first. I'll divide that answer by the hours per unit, and I'll plug those numbers in. Team, I've done the math, and the correct answer now is option 1. Only increasing the selling price of Z will exceed the current throughput contribution per hour of 2. So option 1, correct answer. Again, another tricky question. In the real exam, I would have flagged this one and come back later and even guessed if I had to, if I was running out of time. Moving on to question 4, we have an easy question testing information systems. Boy, wouldn't it be a tragedy to get stuck on the difficult ones and run out of time, not even being able to try this easy question? So again, easy questions first. And I read the question STEM, the task, which of the following could be a closed system? So we want a system that only uses internal information, no external information. Well, target costing begins with setting an external selling price, okay, that will be acceptable to our customers. So target costing uses market research, no good. Public relations department, that's using external information, no good. A rolling budget, the fourth option, now we're updating our budget on a regular interval, maybe monthly, maybe quarterly, and we are adjusting the riskiest variables to changes in the environment. Maybe we update our exchange rates, or maybe we update the cost of a volatile commodity. So a rolling budget needs external information. So by elimination, we can get to 3, and a controlled design test, well, that's going to use internal information. So the most plausible, the best answer is option 3. Moving on to question 5, using an opportunity cost approach to transfer pricing. Ooh, transfer pricing, tricky topic. If you hate transfer pricing, by all means, flag this, come back and do it later. But we're here, let's do it together. What is the minimum transfer price? Well, I'm going to open up the scratch pad, and before I do anything, let me write down the formula that I need. So the opportunity cost to transfer pricing, that will simply be the marginal cost plus the opportunity cost. And those are fancy words for simply saying it's the variable cost plus the lost contribution from choosing a course of action. Now that we have the formula, we can read the story and see what's there. And right away, I see a really important keyword, and this keyword makes this a tricky question. I see that Division A has limited skilled labor, and they're at full capacity making Ys. Therefore, labor is a scarce resource. So if we stop making Ys and we make X's, the opportunity cost is the contribution per hour that we're away from making the Ys. So reading that first sentence, now I've got to make a slight adjustment to my formula, and that'll be lost contribution per hour that we're away from making Y's. And we can now do the math. So the variable cost of making an X, that's easy, that's mental math. That's 270. Okay? And let's get the contribution of making a Y. And that's going to be 600 minus 200 minus 80. That's the selling price minus the variable cost. So I can do that with mental math. 600 minus 280 is going to be 320. And how many hours does it take per unit? Well, it takes $20 per hour, and we see that the cost is 80. So 80 divided by 20 is then 4. Okay? So divide by 4, that's the contribution. Okay? Per hour. And then we got to multiply that by the hours that will be away from the Y. And we can see 120 divided by 20 is 6. So I multiply that by 6. And that will be my minimum transfer price. And that answer comes to $750. Answer, guys, is the second option. Moving on to question 6. I look at the question stem, and we have a further processing problem. What happens to X if we further process it? I like to visualize this on scratch paper. So if I were in the exam center, I'd use the scratch paper provided to sketch this out. Unfortunately, you couldn't do this if you were working on home invigilation. And I'll simulate that with my digital scratch paper here. So I read now I read the details, and we have a process that costs $120,000 to run, and we get X's and Y's from this process. We get 10,000 X's, we get 9,000 Y's. And we don't care about Y. We're only looking at X in this. And we see the selling price is 1.2 for an X. So we are earning revenue right now of $12K if we do nothing further. But we're thinking now, let's further process the X's and we'll turn them into product Z. Let's read about product Z. First thing that happens, we only get 8,000 units out. So there's some evaporation, some loss. So we don't earn revenue on 10,000 units. We only earn revenue on 8,000 units. We also incur fixed costs, 1,600, and variable costs of 50 cents per unit input. Not output, but input. So that's the units before the evaporation. Finally, we get a price. Now that I see what's going on, I can open up my scratch pad and I can lay this out. So if we further process, we will earn revenue of 8,000 multiplied by 2.25. We will incur incremental costs of 1,600 and further incremental costs of 10,000 units in multiplied by 0.5, right, or $5,000. We can plug those numbers into our handy-dandy handheld calculator, and let's see what we get. And we get 11,400 profit after the further processing. Well, right now we could earn 12,000 if we did nothing, okay? So it's a loss. We can cross out options 2 and 3. So we see that the answer is the first one. $600 loss. We get 12,000 if we make X. We get 11,400 if we make Z. So the difference there is a $600 loss. Another relatively tricky one. This might be one to flag and come back after you've scooped up the easy marks. Moving on to question 17. We read the question stem and we see life cycle cost per unit. So we want all of the costs associated with producing this unit from its inception to its retirement. Let's now look at the row headings. We've got number of units. That's going to help me get the variable costs. We've got variable costs. We've got fixed costs. We've got more variable costs. We've got more fixed costs, and then more fixed admin costs. So let's break things into fixed and variable costs, and let's work carefully and neatly in our calculator. And we can do this using our handheld calculator and lots of brackets. So let's set this up together in the Scratchpad. I would just type it into the calculator. I wouldn't do the work double. So let's start out with the variable costs. And we're going to have in 2004, that's 2,000 units multiplied by the two variable costs, 230 plus 50 cents, that's going to be times 2.8, plus in 2005, we've got 5,000 units multiplied by the 1.8 and the 0.4, so that's going to be multiplied by 2.2, plus 7,000 units multiplied by the 1.2 plus the 0.4, or a 1.6. So we've got our variable costs. Now we need our fixed costs, and we've got three categories here: production, selling, and admin. So we can just add all of those to the variable costs. So that's plus 3,000, plus 3,500, plus 4,000. Those are the fixed production costs. Plus 1,500, plus 1,600, plus 1,600. Those are the selling costs, the fixed selling costs. And lastly, the admin costs, plus 7 times 3, 2,100. Okay, plug those carefully into your handy-dandy handheld scientific calculator, and the result will be 4,500. Now, we need to read very carefully. They don't want the total cost over all of the years. They want a unit level cost. So we need to divide that by the total units. And we see 2, 5, and 7. That's 14,000 units. So divide that answer by 14,000. And guys, we get 3.22. The correct answer. Friends, there we have it, the life cycle cost per unit. Moving on to question 18, we see variance analysis. We see a test of the advanced variances from performance management. If you're fuzzy on this topic, I would suggest you just throw down a guess at this point, flag it, go do other things, and then come back and try it later. Okay, because it's quite a tricky question. Let me take you through it in more detail than you need just to get the solution. We'll review what's happening with this variance. And I'll do this on my digital scratch paper. Of course, you do not have digital scratch paper in the real exam. Let's review that sales volume variance. And to calculate that, we've got to find the budgeted contribution. And we compare that to the flexed contribution. If you remember, the flexed budget is simply the original budget restated to the actual activity level. Let's read the story. We see the company has 2% market share, and the total market demand is 250,000. So we get 2% of that, or 5,000 machines. And do we have a contribution per unit? Sure we do. We see that the selling price is 10,000. Contribution is 10% of the price, so that's 1,000. And the budgeted contribution would then be 5 million, wouldn't it? Flexed contribution, can you find the actual activity? How many did we actually sell? Well, I see 5,600. So we sold more than planned, so the sales volume variance will be favorable. And we multiply that again by 1,000. Okay? So if we do the math, that's going to be 5 million, or there we go, we can put it in thousands, it would look like that. The flexed contribution in 1,000 terms. So comparing these two figures gives me a volume variance, a sales volume variance of 600,000, right? Profit is 600,000 higher because we sold 600 more machines. Now, once you remember that, to find the market size and the market share variances, we need to add one more figure into this equation. And remember that if we're breaking a variance down, we need one more number. And that would be simply the revised budget. So I'm going to put over here, and we look in the story that the actual market size this year was 300,000. So the budget should have been 5% of 3,000, or 6,000 units. Or 6 million. Now that we have another figure in there, we can break down that volume variance. This one is about the market size, isn't it? The market grew. So our profit is higher from a higher market. And that would then be the 1 million, wouldn't it? But we're not looking for market size, we're looking for market share. So it's the difference between these two. Yes, we sold 5,600 units, but that's less than what we should have sold with the higher market, right? So we have less market share this time. So that market share variance, which is over here, is adverse, isn't it? And it's adverse by the difference, 400,000. So the answer team is the second one, 400,000 adverse. There you have it, a quick review of the market share and the market size variances, which are a breakdown of the sales volume variance. You need to remember that for your upcoming PM exam. Moving on to the next question, question 9. Boy, this is so much easier than the previous one. Again, proof that you need to check all of the questions first. Do the easy ones, then go back and do the more difficult ones, like question 8. Anyway, we're here. We read the question stem, the task. Which of the following describes a characteristic of the services provided by an optician, an eye doctor? Well, spoiler alert, we can get this just by looking at the options, because only one of the answers is one of the features of a service organization, and that is simultaneity. So the answer, guys, is simultaneity. Services, in theory, are intangible, and it's not homogeneous, but it's heterogeneity. Each provision of the eye doctor's service will be a little bit different. Everybody has different eyes. In manufacturing, we can have homogeneous production. Every unit comes out the same. And non-perishable, nope, we cannot store services in the slow period and put them in inventory and then use them in the busy period, right? The optician's services are limited by the number of patients they can see per day. And now, just let's make sure, let's be thorough. Let's read the story. And we see that we have a standard optician with many services, and they can also buy contact lenses and glasses at the same time. So simultaneity fits best. Guys, moving on to question 10, we have what should be an easy question testing security of information. However, I feel your pain if you were confused by this. If you studied from the approved text, you'll be familiar with this terminology, but if you haven't, it can be a little confusing. So we can only choose one option, which is the least effective way to secure confidential information. Monitoring email. Well, that's reasonable. Companies monitor the email of their employees. Encryption. That's reasonable. Dial back facility. This is when you need to call back and you need to enter in some confidential information. A little bit outdated. Nowadays, they do that type of authentication on your telephone. They send you an email to your phone as well. Now, universal passwords. That doesn't mean that everybody is required to get a password. In the context here, they mean that everybody has the same password, which is pretty ridiculous in my opinion. So that one will be least effective in securing confidential information. Moving on to question 11, friends. We read the question STEM. We've got activity-based costing, a classic. Let's get organized here with the scratch pad. That will help us. So we remember we've got to find our cost pools. We've got to find our cost drivers. We got to get a cost per driver. And then we need to understand how many drivers, how many inspections are consumed by one alpha. We read the short scenario, we check out the numbers, we get organized. And we see that we're going after inspection cost per unit. And inspections are a batch level activity, not a unit level activity. So, first step, do we have a cost pool? Yes, we do. The cost pool is the $250,000. Now, let's get the total number of inspections. And we have alphas and we have zetas. And can we get the total number of batches for the alpha? Sure we can. We produce 2,500 in a batch size of 500, so that's going to be 5 batches. And it's 4 inspections per batch, so that's going to be 20 inspections in total for the alpha. The zeta, guys, well, that's 8,000 units with a batch size of 1,000, so we're going to do 8 batches, and we do 1 inspection per batch, so that's multiplied by 1, and we get 8 inspections. So my total inspections will be 28. Now, let's assign the costs to product A based on consumption of inspections. So the costs to product alpha, that'll be the 250,000 multiplied by 20. Those are the inspections to alpha over the total number of inspections, which would be 28. I'm going to write that out here, but in the real exam, there would be no benefit to that. You would just leave that number in your calculator and you'd go on to the next step. But so that's 178,571.429. That's the total cost to product A, but we've got to get that to a unit level. We've got to divide that figure by the 2,500 units, and rounding off, that comes to 71.43, the answer we're looking for. Tricky question because it's not multiple choice, so we don't know if that answer is good or not. We don't know if we have a glaring typo in here, but that's the best we can do. So let's move on to the next question. Moving on to question 12. We have a theoretical question, which is a nice break from the difficult numerical question we just tackled. We read the task and we are asked to evaluate two statements related to the existence of multiple objectives for a not-for-profit organization. Well, having multiple objectives ensures goal congruence between stakeholders. That is incorrect. Different stakeholders may have conflicting objectives, so the existence of multiple objectives makes goal congruence more difficult. Compromise between objectives can be problematic. That one makes sense. The government might want one objective, the volunteers at the non-for-profit might want something else, the community might want a third thing, and the board of trustees might want a fourth thing. So compromise between all of these stakeholders could be a difficult negotiation. There you go. Those are the correct options. Question 13, a rather tricky topic. This is testing your deep knowledge of environmental management accounting. Now, if you had time pressure when you were preparing for your exam, maybe you have a difficult job, maybe you're a busy family person, you might not have studied the materials at the depth required to answer this question. That by itself doesn't make the difference between a fail and a pass. One difficult objective test question. Guys, waste flows does not belong there simply because it's not in the definition of flow cost accounting. Moving on to question 14, we have a classic question type where we need to evaluate statements and select the correct combination of statements. I like to look at the options first. And doing that, I see that one answer needs to be incorrect or two need to be incorrect. All four cannot be correct. So that helps. So I'm definitely going to find one or maybe two that I need to eliminate. Let's now read the story. And we're talking about expected values to evaluate a one-off, a one-time project. And the expected value was calculated with two profits with two probabilities of 40 and 60% respectively. What can we eliminate? Well, let's look at statement 1. The expected value profit is the profit which has the highest probability of being achieved. Nope, it's the weighted average of the profits. So it cannot be option 3. 3 goes out, and 4 remains. So we know that 4 is correct, and we just have to now test 2 and 3, see if we like them. Statement 2. The expected value gives no indication of the dispersion of the possible outcomes. That is correct. In order to evaluate how spread out the data is, we would need standard deviation. So I'm liking statement 2. Statement 3. Expected values are relatively insensitive to assumptions about probability. No, the expected value will change. If we change the probability, the expected value changes, so they are sensitive to the probability. So the answer, guys, is the first option, 2 and 4. 4, the expected value may not correspond to any of the actual outcomes. That's true. Moving on to the last question. Ending on an easier note, we have a theoretical question about responsibility centers. Let's read the story. Let's see what this investment center manager is responsible for. Well, they negotiate selling prices, and they're in charge of payables, inventory, cash management, and using a debt factor to manage their receivables. So this person's in charge of working capital management as well. So they would be accountable for generating revenues, for setting a transfer price, for management of working capital. However, apportioned head office costs, this decision is made at the head office. The investment center manager does not make that decision, so we would not hold them accountable for those costs. There you have the correct combination of answers. Friends, this brings us to the end of our debrief of Section A of Practice Exam 2. I hope you found it helpful. If you did, feel free to throw down a like and subscribe to the channel. Good luck on your upcoming PM exam. This is Steve signing out for now.